Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we are diving into Interactive Strength Inc. And let me tell you, this filing has some notes that are quite noteworthy. We are looking at Interactive Strength Inc. filing a Form 8K, which usually means something important and immediate has happened. Think of it as a company's urgent announcement to the world, like a shareholder alert or a big deal being finalized. So, what is the big news? It all boils down to money and how the company is rearranging its financial agreements. It seems they've been busy making some significant changes to their debt structure by amending existing agreements. Specifically, on the 18th of September 2025, the company Interactive Strength Inc. and an investor entered into something called the Global Note Amendment Agreement. Now, what does that fancy name mean in simple terms? It means they are rewriting the rules for some very important financial documents, the original notes. They are basically making them into what they call an amended and restated senior secured convertible note, or A&R note for short. This is like taking an old contract and updating it with new terms and conditions, making it current and perhaps more favorable or clearer for both sides. This A&R note has some key features. Its maturity date, meaning when the company has to pay it back, will be 3 years from when the original note was first issued. Now, the really interesting part is how these notes can be converted into the company's stock. The company uses a conversion price, which is set at 130% of the stock's closing price on the day before the deal was finalized. They also have a special alternative conversion option where the price can be even lower, especially if the company encounters problems. This gives the investor flexibility, but it also means that if the stock price is low, these notes could be converted into a lot more shares, potentially diluting existing shareholders. The filing also details an exercise of what are called Class A incremental warrants. Think of warrants as options, giving the holder the right to buy something later at a set price. In this case, the investor used these warrants to buy more of the company. debt, specifically Class A incremental notes, for $2 million. As a result of this exercise, the company issued more warrants, called Class A incremental common warrants, which allow the investor to buy shares of the company's common stock. These Class A incremental common warrants have an exercise price of $5.916 per share. They can be used anytime between the 18th of September 2025 and the 18th of September 2032. This gives the investor a long window to decide if and when they want to buy the company's stock. The exercise price can also change based on things like stock splits or if the company issues more shares, which is pretty standard. This specific warrant exercise is important because it is part of a series of transactions. It follows earlier agreements made in January and March of 2025, where the company initially sold convertible notes and warrants to this same investor. The company has also noted that earlier notes have been fully converted into shares of common stock, meaning this investment is actively pushing towards changing the company's ownership structure. These newly issued Class A incremental notes have a conversion price of $3.85 and a maturity date of the 18th of September 2026. This means that the company essentially took on more debt that can convert into stock, but with specific terms that are tied to the stock price at the time of the original deal. A crucial detail here is the ownership limit. This investor can convert their notes or exercise their warrants only up to a certain percentage of the company's outstanding shares, initially 4.99%, but they can choose to increase this limit to 9.99%. This is a common protective measure to avoid triggering mandatory takeover bids, or to prevent one investor from gaining too much control too quickly. The company also got shareholder approval to issue a significant number of shares back in March, specifically over 10 million shares for note conversions and over 600,000 for warrant exercises. This is important because it tells us the company has the authorization to allow these conversions without needing new approvals every time, suggesting they anticipated these kinds of financial maneuvers. Much of what is described in this report falls under the category of unregistered sales of equity securities. This means that the shares and warrants being issued are not being registered with the Securities and Exchange Commission in the usual public offering way. Instead, they are being sold under specific exemptions, often to accredited investors like the one in this deal, and are generally intended for sophisticated investors who understand the risks involved. The investor here is an accredited investor, which is a designation in the US for individuals or entities that meet certain income or net worth thresholds, implying they have the financial sophistication to participate in these types of private placements. Finally, looking at the exhibits, we see the actual documents that lay out the specifics of these agreements. The form of amended amended and restated senior secured convertible note and the Global Note Amendment Agreement itself. These are the nitty-gritty legal contracts that govern these complex financial relationships. So, what does this all mean for Interactive Strength Inc? On one hand, the company is securing capital, which is essential for growth. They are also working with investors to structure deals that give the investors certain rights and protections, usually tied to the company's stock performance. The company is actively engaging in financing activities that involve convertible debt and warrants, a common strategy for companies looking to raise funds without immediately diluting their stock aggressively. However, the repeated issuance of warrants and convertible notes means there is a constant potential for a large number of shares to enter the market, which could put pressure on the stock price if not managed carefully. The company received stockholder approval to issue a large number of shares, indicating a pre-approved mechanism for dilution, which is a key risk for current shareholders. Our take is that Interactive Strength Inc. is in a phase of active financial maneuvering. They are balancing the need for capital with the complexities of convertible debt and equity warrants. The ability to convert these instruments into stock at set prices offers the investor a potential upside if the company performs well, but it also creates a consistent overhang of potential new shares on the market. Investors should closely monitor how and when these convertible notes and warrants are exercised, as this will directly impact the number of shares outstanding and the value of existing holdings. The company's direction seems to be focused on using these financial tools to fuel its operations, but the long-term success will depend on its ability to grow its business and eventually make these debt obligations manageable. What is your take on these financial maneuvers by Interactive Strength Inc? Do you think this strategy is smart or risky? Let us know your thoughts in the comments below. If you found this deep dive helpful, please hit that like button. And if you want more of these corporate breakdowns, make sure you subscribe and turn on notifications. Don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next Decode.